afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Justin Nielsen here with a breakdown of the action in today's session, Monday, June 3rd, where, Justin, it was a bit of a manic Monday today. A lot going on.
Well done, going with a Prince classic, the Bengals, you name it. And yeah, there was a lot happening. I mean, between glitches, elections, poaching, oh my, that was kind of the title I went with today. But we have some stocks to talk about as well, including some decent setups in both Domino's and Regeneron, a few medicals that were looking very interesting. And also we'll talk a little bit about how much a CEO can make a difference with Coherent.
Yeah. Okay. Well, a lot to get to. So let's do it. Starting with a look at the major indexes. The NASDAQ today finishing up about 0.6%, a little bit of a topsy-turvy day, opened higher, filled the gap and then some, rebounded a bit by the close. Then we had the S&P 500 finishing in the green as well, but just by 0.1%, although this too, an upside reversal day with support right where we'd like to see it. Justin, were you going to chime in with something?
No, you're doing great so far. I just want to say this is exactly what you wanted to see out of the indexes. It was exciting, right? And again, that's not the way they started. You had to kind of deal with some uncertainty there.
Right.
But the fact that you got that upside reversal on Friday, this is what you wanted to see. You wanted to see a follow up to that, and the reversal to basically continue.
Exactly. Yeah. So closing in the green too. That's definitely great to see here for both of those major indexes. Let's take a look also at the Dow. Blue chip stocks here today, finishing lower on the day by about 0.3% or so, still below the 50-day line. And IWM, small caps, we were really wanting those to get into gear, and a downside reversal here today for IWM, though we are still holding above the 50-day line as of now.
Yeah. So I think the trouble spots are with the Russell 2000 because again, those looked like at the opening they were continuing, right? That follow up from Friday's move, and they did not. So there was definitely a disappointment there. Also with the MDY, the small cap S&P 400, also had a very similar look. And look, the Dow Jones Industrial Average, you brought it up earlier, and okay, we don't pay as much attention to this, but the fact that you got that nice reversal, and here we are coming up to the 50-day moving average line, and you can't quite get there. It would have been nice to kind of see this follow up as well. So you do have this divergence that's continuing, where you've got a lot of strength on the NASDAQ, some of that trickling over to the S&P 500, and then non-participation in a lot of ways for the Russell 2000 and mid caps. But again, they didn't break down, right? So they're still holding. So I think that there's still hope there. But again, it's just not nearly as strong as what the NASDAQ showed us today.
Exactly. Okay, well, let's take a look at RSP. This is the equal weighted S&P 500 ETF. So showing what your average stock is doing. And it looks like a lot of price discovery here today, Justin. So not quite clearly getting into gear like we're seeing with the S&P 500 and NASDAQ indexes.
Yeah. And this is, when you say average stock, this is the average of the S&P 500, right? So you're looking at the top 500 stocks in the country, but it's also kind of letting you know, okay, it's skewed, right? When you see that kind of divergence, it lets you, especially with the NASDAQ as strong as it is, it makes you start wondering, hey, what's really driving the indexes forward? And I mean, certainly you got to credit NVIDIA for part of that, because with it being such a large market cap, and I do have a position in NVIDIA myself, as does Ali and a lot of us around here. But look, when that's up 5% and you've got that much of a weighting in the NASDAQ, it's gonna help, right? And so again, when you have the RSP, which is equal weighted, and that 5% gain for NVIDIA just doesn't have the same oomph, when it's just one of 500 stocks, that changes things.
Yeah. Okay. Also in the news today was some technical glitches with the New York Stock Exchange impacting some pricing data for a number of stocks, including Warren Buffett's Berkshire Hathaway, BRKA. You can just see this funky looking bar here by the end of the day, but for a good amount of the day, or at least part of the day, the data was saying that this stock was down 99%, Justin. So
Yeah.
adding to the mania of Monday today.
Yeah, I can't even imagine what a holder of Berkshire Hathaway, Class A shares at over 600,000, per share, and seeing it at 185. Yeah, not 1,185 is the price that it was. So yes, there was some pricing area, and I mean you saw this with Barrick Gold as well, GOLD. There were a number of stocks that just had this weird pricing thing. They got it fixed and everything, and look, when you depend that much on technology, things like this are going to happen. So as Mike Webster, our senior market strategist, was talking about this morning, hey, sometimes it might not be a bad idea to just put in some limit orders for the day instead of doing your market orders, just in case some of these glitches were happening for the rest of the day. But it seemed like they got it kind of ironed out pretty early, but it's going to make some charts look pretty bad unless they just take those trades out.
Yeah. So a lot of traders talking about this today. So a lot of buzz, a lot of Google searches. So I thought we would just, you put it in the notes, but I definitely wanted to bring it up as well too, because definitely adding to the tone that we saw today. Just, always something interesting, right?
Yeah, there's
always
exactly.
Something.
And again, the problem is that when you're kind of at this, critical inflection point, and you're really kind of looking for evidence one way or the other, it's these kind of things that can kind of just, hurt your psyche to a degree.
Yeah. So glad we got that figured out. Let's also check out EWW. This ETF tracks Mexico, and to see an ETF, a country ETF that is down almost 11% on the day, Justin, there's news associated with it. This is not a glitch. This is on news.
Yes. Yeah. So look, the election was happening, and pretty much everyone was expecting Claudia Sheinbaum to take her place in history as the first president of Mexico. But what I think a lot of people were a little concerned about is that the ruling party, the Morena party, was getting close to a 2/3 majority, and so that could make some constitutional shakeups, because now with that supermajority, or even if they don't get the 2/3, they can get a little bit more traction on making some sweeping changes. And this is kind of what Andres Manuel Lopez Obrador started, and he's going to have a little bit of time.
Right?
What's that?
The incumbent.
That's the current president. Yes, he's the current president, and he's going to have a little bit of time with the new Congress to potentially push through some things that he was working on that he couldn't do, but he's going to have a month with this potential supermajority or very close to it. So there's a lot of I think concerns from investors of what kind of things can happen, nationalism, and Claudia Sheinbaum has kind of tried to quell some of those fears. But yeah, as you mentioned, this is something that you really don't typically see for an ETF to move this much, and certainly not a country ETF to move this much.
Yeah, exactly. So something to take note of.
But you know what? Let's look on the flip side.
Yeah.
Because in India, we have another 5 years potentially from the president there, and he has definitely been very big on getting capitalist ideas pushed in India, and been a boon for the economy. And so this can go the other way, right? Where you had a country ETF that was up considerably because of elections as well. And those elections, I don't think are finished yet. I think the results are expected to be in a few hours.
And this is the INDA ETF, up 3.4% on the day. Looking at a weekly chart here, it does look like we are in new high territory now. A couple of months ago, crossing the prior highs from October 2021. Let's also check out some of the sector ETFs of note today. Here's XLV, the healthcare sector, definitely one of the focuses for us as we're seeing that rotation. XLV today up 0.7%.
Yeah, and so this was the top sector spider ETF today. And look, we've been seeing some interesting action. Let's also just take a look at XBI, because a lot of the biomed biotech stocks, which XBI covers that, have been looking a lot stronger. And we'll talk about one of those today. But yeah, definitely worth keeping your eye on, because healthcare looking very strong.
Mm-hmm. And XLE on the downside. We thought energy was going to start getting into gear potentially end of last week, but smacked back down today, down 2.6% as the price of oil falls to multi-month lows here, Justin.
Yeah, so I guess you win some, you lose some, and where healthcare's gains are oil's losses. So definitely something to keep in mind. And look, commodities are a little bit tricky anyway, but with a lot of these having sliced through their 50-day moving average lines a few weeks ago, you really have to kind of take that as a warning sign. And when you start seeing it having trouble get back above that line, I think that tells you something. And so as this 50-day moving average line starts to kind of turn lower, that's just letting you know what kind of trend you're in. And for us, we're trend followers, right? So we're looking at trends getting established, and right now this is looking like it's potentially starting a downtrend. So that is a concern there.
Yes, it is. Okay, let's get to some individual movers. We've been tracking DPZ, Domino's Pizza, and a nice actionable opportunity here with a lot of different levels, I would say, coinciding with this setup, Justin.
Yeah, and you made that joke earlier, and I didn't get it because I haven't actually been on Domino's app. I have a pizza place that's near us that we love. It's a local. So yeah. I haven't used Domino's in a very long time. But yes, they do have their pizza tracker. And look, you gotta, with Domino's, this does tend to be like watching paint dry. It's not exciting. It's usually very slow. But this pullback to the 50-day moving average line right at 500 is pretty interesting to look at. And the monthly chart, now granted, a lot of these gains happened as it was really kind of changing its whole infrastructure in terms of getting those deliveries and the tracking and everything that just really made a big difference for this company. And it's had a long-term move. It's a long-term leader. If you look at the weekly chart, you can see part of the reason why is because not only do you have that relative strength outperformance, but also you've got a decent double-digit earnings growth rate with huge stability. So the lower number here of 6 means that it's more stable. The higher number of 99 would be the least stable, very all over the place. But the stability of the earnings and decent at that, it's a pretty good combination. And you see that with a lot of what we call long-term leaders. And again, they might be slower, but if they are outperforming the S&P 500, these are ones that you can kind of look at as more to buy off of pullbacks, which is why I like the setup here today. You got that support right at the 50-day at 500, a little bit of a pullback, and you're just breaking the downtrend today. So very, very good action. Again, might not be that exciting, might not, be a NVIDIA type move, but these are the ones that are a little bit easier to hold. And when you look back on them, sometimes you can say, wow, I got a big gain out of that just by holding for a while.
Right. And I think this is the place to try something with it, versus the move on earnings where it was already so extended from the moving averages. Let it settle down, let it tighten up, let the moving averages catch up. So your risk is very clearly defined here with this, even if the trade doesn't work out.
Yeah, if it goes below 500, it's going to look funny. It's going to look like it needs some time to continue baking, if you will. So yeah, it's one of those things where, as you said, you've got that clearly defined risk, and it's not too much. So you kind of know if you're right or wrong pretty quickly.
Next on the list, let's take a look at a name in the medical sector, Regeneron, REGN. It's getting pretty close, Justin, to that psychological level of 1,000 in terms of the share price, up 1% today, and recently found support at the 21-day.
Yeah, and the nice reversal on that day. Plus, it was interesting that this was able to follow up on that. A lot of the medical space, for as ugly as Friday looked at one time, and again, it worked itself out and it closed well. But remember, at one point we were down below the 21-day moving average line. Things were looking bad. It was the sky is falling type situation. But a lot of the medical stocks were holding up. And I would put Regeneron among those, which followed up on its reversal on Friday and then followed up again today. So now, you could have been buying it either on Thursday or Friday of last week. Today, I think it's a little bit trickier. You could still buy it, but keep in mind, yes, you are coming up to that 1,000 level, which is also the high of kind of that, the left-hand side of the cup, the high of the handle. We're all right around that same area. So this is an important area of resistance. What you'd really like to see is it burst through there. And if it does kind of get stuck here, that's going to tell you something. So that's another piece of data that's going to be worth watching. So I think, we're at a critical inflection point. And if we can continue higher, I think this one has a good shot. And look, it's not alone. As we already mentioned, XBI, is kind of showing a lot of strength here too. Some of the big players in there, Vertex, I do have a position in Vertex that's also on Swing Trader. That's popped out of there. A lot of big players in here that are looking strong.
Yeah, absolutely. Okay, and now we're getting to the poaching section of the headline. Here's a look at Coherent, COHR. We've got an RS line blue dot, of course, because we saw the stock up about 23% today, and it was already working on a base headed into today's move. So the news here, Lattice Semiconductor CEO finding greener pastures. Tell us more, Justin.
Yeah. So, I mean, as you mentioned, this was a really nice looking base, but not too many people think of, when we talk about the new in things, that we talk about new highs, we talk about new products, new services, new conditions in the industry. But one of the things we don't talk about too much sometimes are new CEOs. Sometimes a CEO, it can be a very important component of a stock. This is something we've seen, time and time again. I mean, think of when Steve Jobs came back to Apple. There had been times where I remember, this was long ago. Iacocca, from Chrysler. He went into I think the restaurant business at one point. And so, sometimes CEOs have kind of magic that they bring along with them. And that was the case apparently for Jim Anderson here, because as much as, here you have the winners and the losers, Coherent's gain is Lattice Semiconductor's loss here, because you look at LSCC and that was down 15%. So a lot of people looking at Jim Anderson's departure being, very good for Coherent and very bad for Lattice Semiconductor. So it's a good reminder to kind of, sometimes we do, we'll have profiles on CEOs, look at those in the leaders and success area, because it can kind of give you some insight into what these CEOs bring to the company. And when they move on to another company, if they can bring that success with them, if they've got great knowledge. I mean, we've been talking about with Kava and how the Panera Bread, CEO, there's these moves sometimes that happen, and it's just one more element that you can use to kind of get a handle on what a stock is all about, its prospects and its future, by understanding a little bit of the CEO and the direction that they tend to bring things in.
Right. So in terms of the stock move, we did get a cup with handle base breakout, but shares became quickly extended. So is this one of those things, Justin, where you either have to act quick on the breakout before it gets extended, or because for a lot of growth investors, this probably had fallen off the radar, given, a lot of red there with the quarterly numbers. So is this okay, let's see if this new CEO can turn things around. We're seeing a strong earnings estimate for 2025. Can we see that come to life with this new leadership?
Yeah. On the one hand, you could say, well, gosh, it was forming a base. And if you had done your homework, you could have potentially been buying this as that, started its move instead of where it finished. But I could also see reasons for passing on this one just based on its relative strength, for instance. So I do think it's out of position now, but it's worth keeping your eye on, because sometimes we look at these earnings gaps where something will very quickly get extended out of position. But if it can hold tight up there, and if it can kind of make a new base or a new structure, that might be worth considering again.
Yep. Sounds like a plan. Well, thank you, Justin, for reminding us of the new can also mean a new CEO. So that is it for today, everyone. A couple of previews as to what's coming up tomorrow, in addition to IB Live, which we hope everyone tunes in each morning, starting 10 minutes before the opening bell with our Tuesday crew. But also at 2 p.m. Eastern tomorrow, we have our monthly market report with Jim Ropel. That'll be live on YouTube. We'll also post it to investors.com/videos. Then, of course, you have Stock Market Today live a few minutes after the closing bell. And then at 5 p.m. Eastern, 2 p.m. Pacific, we have our Swing Trader Status Update with Justin and Mike. Justin, lots going on.
Spend the day with us.
Yeah, spend the day with us. We like those kinds of days. All right. Well, a lot coming up and a lot to look forward to. We've got Jim Ropel's thoughts on the market and stocks he's watching. And I mean, you guys have been so busy on Swing Trader, and it seems like we're at a pretty pivotal point in the market. So really looking forward to your breakdown as well of all of that.
Mm-hmm. And you know what, I'm just going to throw out there, because we were chatting with Jeffrey Hirsch today from the Stock Traders Almanac. He's going to be on the podcast on Wednesday. So, that's going to be a very interesting talk too, because he's got a lot of data on seasonality, on, election years. Because look, Mexico and India are having their elections, but we've got one this year too.
Exactly.
So, what you can expect from election years in the US market. So that's going to be a great conversation coming up on Wednesday. So maybe it's not just spend the day with us, spend the week with us.
I know. It seems that way each and every week passes. Because there's more that we have up our sleeves too, that we haven't even told y'all about yet. So just you wait. But yeah, that conversation will be ominous. I know. No, it's exciting. Lots to come. But that conversation will be dropping Thursday, investors.com/podcast for that. All right, everyone. That is it for today. And we'll see you back here tomorrow.